The world of insurance, I want the audience and my listener to understand, is nothing more than a pool of our money managed by an insurance company.
When you need some advice, never sacrifice, always get it right. Ask the Planman. Finance, insurance, and more.
Hi, everybody. Welcome to Ask the Planman. I'm your host, Bruce Weinstein. I believe everybody out there needs to have a plan, a strategy, a way to execute to protect themselves and their family. And today we're going to talk about what happens when the plan doesn't go the way you wanted. What happens when somebody gets declined in the insurance world for what they're trying to purchase. So I'm with my producer, Allie, today. Allie, welcome. Let's get into the nuts and bolts of this. I was supposed to tee it up to you, but I kind of jumped on it a little bit. A big question people are asked all the time is, what are my outs? If I can't get insurance that I need the conventional way, well, where does the plan man come in, right? What would the plan man do when somebody can't buy their life insurance because they got declined, or they can't get their disability or their long-term care? And so let's go to the fundamental point of what exactly insurance is. Insurance is a vehicle to give you an asset until you have the asset. So what does that mean? Well, I'm not able to self-insure or self-fund yet. I'm still acquiring money. And so you shared with me some of your particular situations. So why don't you share, back some of the challenge, and we can kind of dive into what you've been doing to fix that or address that. Maybe.
Yeah, absolutely. So, as a self-employed individual, when I went to apply for disability insurance, because, wanted to make sure I covered myself, I am a plus-sized individual, and so I was denied for coverage. And so I ended up having to figure out other ways to basically self-fund that disability insurance.
Okay. So let's break down. There's what's called short-term disability and long-term disability. And so a self-employed individual, when we pay our self-employment tax, includes disability coverage through the government. And so there's short and long-term. The government's more long-term, meaning after 6 months, you would apply for benefits. They are a little bit of a challenge, and there's a fight that usually ensues. But ultimately, if you have a permanent or strong partial disability, you'll get, it's deemed Social Security disability. Okay. So there's money there. But the first 6 months is usually where you're going to have that gap. So in your case, you've been working towards putting that money aside to at least get the 6 months covered. Is that correct?
Yep, that is right.
So in general, regardless of whether you can get the insurance or not, everybody in theory should have 3 to 6 months of their expenses in a cash reserve because of this exact reason. They may not have short-term disability at work. They might be self-employed and not have disability at all. And what if they lost their job? What if there's a disconnection of business revenue? So if you just lost your top 3 clients and now you can't pay your bills, well, I need a cash reserve. So when I've counseled clients over the years, you think of your financial plan as building a house. You don't build the roof first. You dig a foundation. You put in your cinder blocks, you put in your concrete, you dig out your foundation, then you start building out your walls, and eventually you put in a ceiling and then build your second floor to 2-story and then your roof, right? So you don't want to build your financial house backwards. And all too often, that's what people do. They start investing without having a foundation. And the foundation is cash reserve and proper insurances. And that keeps your infrastructure intact from not imploding. And so before you start putting money in the S&P 500 and gambling in Bitcoin, You should have a cash reserve. You should have proper disability and proper life insurance in place. You have your auto insurance. If you own a home, you have your auto insurance. Those are somewhat mandated. Insurances break down into committed or required and then discretionary. So if you're driving by the rules of the road, you need to have auto insurance. Unfortunately, a lot of people are uninsured out there and causes problems for those who are insured. And so that's a requirement. If you have a mortgage on your home, you need to have homeowners insurance, at least to the amount of the money borrowed. And again, people don't even realize that. We've talked about that in a previous episode. If I owe $500,000, I need at least $500,000 of homeowners insurance to cover the bank's mortgage, the loan. But if my property's worth $800,000, I want to have my equity covered, don't I? And so what's happened down here in Florida is rates have gone up so much, people are only insuring their homes to the banknotes to keep their costs down. And they're leaving themselves exposed for their own equity. That's not a healthy thing to do. There's a reason you owe the bank money, means you don't have the money to pay the mortgage off. Why are you trying to self-insure the actual equity? So, we live where the hurricanes like to come visit too frequently. So, these are things people need to understand and be aware of. So, back to being denied. So, part of the problem, as good as the effort and the intent, is you don't know the longevity of the disability. If it's permanent, you're still probably going to have the inability to truly self-fund in advance all that money. Over time, you can keep doing it, right? So what you need to do is maybe have some calculations on age and longevity to know how much money ultimately should be available beyond that 6 months. I mean, that would certainly be the course of action I would suggest, is not stop when you got to the 6 months. Because A, you may never get approved for Social Security disability. B, they're never going to give you 100% of your income protected, right? So again, it goes back to your budget, your cash flow. Obviously, you're married, and so you have spousal support there. But again, you don't know what changes in his world and his income, and if he needs to provide more care. And we don't want to use you two, but in general, if one spouse is ill and the other spouse is providing care and not working and making the same month, or you need a caregiver and there's an extra burden of expense there. So, it's convoluted of you don't know what you're going to be dealing with, and it's going to be expensive regardless. So it drives the point, unfortunately for your situation, but to the listener out there who's on the fence and hasn't pursued this, is any insurance is only as good as you being insurable. And you're never going to be younger than you are today. In theory, you're never going to be healthier than you are today. And so the rates are going to always be higher because it's age-based, and then it's going to be health-based. And so people don't understand, again, you've heard me, squash the apathy problem and the omnipotence problem out there. It's not going to happen to me, and, I'm healthy, and you're healthy until you're not. Just this morning alone, I was at my chamber meeting, and no sooner am I leaving, I'm in the car driving home, one of the members calls and says, "I need that attorney's phone number." She's in a panic. I'm like, "What happened?" She goes, "I just got T-boned at the intersection leaving the meeting." And then you can hear her groaning. I'm like, "Did you call the police?" Like, yeah. But I need the attorneys. We have a personal injury attorney. And she wanted the number. And she didn't expect to get T-boned. That's why it's called an accident. It's not called an intendant. I didn't intend to do it. It's an accident. And so nobody plans on having a stroke. Nobody plans on having a heart attack. We talk about the health insurance world. Walk around a hospital, aside from the maternity ward, go ask every patient in the ER and the hospital, "Did you plan on being here today?" Because the answer is no, you didn't. And so that's why you need insurance. And so Do you want a $240,000 bill because something happened to your heart rhythm and they needed to do a procedure? Or do you want to have insurance that's going to take care of the majority of it, right? So, whether it's health insurance, life insurance, disability, long-term care, we're going to do an episode later on about some of the particulars of long-term care in that regard. But again, the same thing. What if you can't get long-term care insurance? Well, you better get it on your spouse. You better have it on Glenn. You better have disability on Glenn, right? Because you're vulnerable to you. Don't make it worse, because now if you're both disabled, well, shame on you. You didn't have him covered when he could have been covered. And now you're both in jeopardy. So God forbid you were in that car accident, right, with Vivian, and you both got injured and now you're both disabled. I mean, it happens. Fortunately, not often, but it happens. And so you want to make sure that the healthy person is properly covered, would be lesson number 2 to your point and to your question here is, so if I'm not insurable for that particular item, I want to make sure my significant other is properly covered, if not overcovered. Does that make sense?
Yeah, absolutely. And in my particular case, I was completely healthy. Blood work came back good. Everything came good. It literally was just weight related. So it's, super frustrating when you have that kind of situation. So then my question would be, when you do have that situation where you get rejected for some reason or another, are there alternatives that you can look into to still kind of offer some sort of coverage? I'm thinking like an umbrella policy or something like that.
Well, so first is, a decline like that wouldn't be permanent. So whether you choose to do it or not, you can find out where your BMI, your body mass index, needs to be to potentially get an offer. And that's up to you of whether or not you have the desire and the ability to take off that difference in weight, right? So that's different than somebody who's a diabetic or has cancer. I can't unring that bell. But if somebody just happens to be a little bit larger and they're being declined for weight, well, the good news is you can do something, right? Like you can revisit that. Now, normally a decline, a smoker rating is at least a 12-month wait. Okay. So you can go on some kind of weight loss. You join Weight Watchers. You can get the sleeve. You can, it depends on how dramatic you want to be, but you could figure out, hey, I need to lose 40 pounds. I'm going to take the next year and work on that, and then be able to show and document I lost the weight. I've had the weight off, and now reapply. And lo and behold, you get your coverage. And as far as I know, they don't come back to you later and find out you put the 40 pounds back on. So, once you have it, it's yours, right? So I'm being a little facetious there, but you get the point. As far as alternatives from a life insurance standpoint, there's a world of guaranteed issue policies, which are whole life, and they've got some caveats. I tend not to operate in that world. People may hear it or being marketed as final expense, where you're getting seniors to buy $5,000, $10,000, $25,000 of burial policy type coverage called final expense. It's whole life. It's guaranteed issue in a lot of cases. It's expensive. If it's guaranteed issue, it's going to be more than if somebody went through underwriting. So think of underwriting as Allie's looking for a used car. And she goes on Craigslist and she goes on Auto Trader, and she sees all these cars she's interested in. There's Carfax, you get your own inspection, but how many times are you going to trust buying a car sight unseen without checking it out? To any used car I buy, it's either certified pre-owned, and I've been screwed on those because Carfax is BS, by the way. Carfax does not report. They're 6 months late in reporting. Here's my complaint file. I bought a certified pre-owned high-end Mercedes years ago. And then I went to get rid of it. And I had no reason to check a Carfax. I never had an accident with it. And they're like, oh, your car had an accident in such and such. And I'm like, I bought that car certified pre-owned. That means there's no accident history. Oh, yeah, well, that got reported after they sold you the car. And I went back to the dealer and I bitched. I'm like, you sold me a car based on that. I wanted the difference. I got screwed. If you want the life insurance company to give you a policy, you're asking them to bet on your life. What am I buying? They're buying a used car and a human being, right? Like that's what they're buying. So if you go through underwriting, that's like you taking that used car to your mechanic who you trust to give it a once over and make sure the car is in good shape and not necessarily going to give you problems. Doesn't mean the car won't have problems, but he doesn't see anything that's glaringly like, oh, this is this and this is that, and your A-frame's bent. And, I've had those, like the A-frame's bent. Like, yeah, car was in an accident. They don't report it. And they're selling you a car. And so I found it, right? So no thanks, I pass on the car, right? So it's the same thing with life insurance. So if you go through underwriting and you're approved, you gave them the ability to check under the hood. You want guaranteed issue, they know you got problems. It's more expensive. And a lot of the guaranteed issue policies have a 2 to 3 year, waiting period. Meaning if you die in the first 2 years, they don't pay. You'll get your money back, the premiums you paid plus some interest. But again, we're back on that, previous episode we talked about, terminal illness and a life insurance policy and being able to get at that money sooner. And a lot of them do provide it. So if I'm now turning around, I got diagnosed and now I want another policy. Well, I can't get it conventional ways. I can pick up $25,000 to $50,000 of guaranteed issue and just pay whatever they want, knowing if I survive the 2 years, a check will get paid. If I don't survive the 2 years, I get my money back with interest. Okay. It is what it is, right? But I don't know of any disability options. If you're declined, there's no secondary market like life insurance has. And the same with long-term care. So if disability and long-term care are declines, you may not have markets. Now, you mentioned to me offline, you got something through Lloyd's of London. I obviously I don't know exactly what that policy entails, but Lloyd's of London is just another market for insurance. Lloyd's of London is a consortium of what I believe to be over 3,000 different insurance companies that participate. And so when you go to Lloyd's of London, it's basically tailoring a private policy and putting it to their membership. Does anybody want this risk? And they'll make an offer. And so, it's just another marketplace. Now, it has its purpose, but I'm sure you're paying a decent amount and not getting the same coverage you would have gotten under a traditional plan. But
in that particular case, I chose to go the route of just self-funding, 6 months. And my goal is to get to about a year of money just available for me if I need it. But interestingly enough, our tiny house, we actually have a tiny house on wheels. That is a Lloyd's of London policy because nobody wanted to take that risk, but Lloyd's of London found us someone. So
yeah, no. Again, I'm going to go back to Insurance 101. The world of insurance, I want the audience and my listener to understand, is nothing more than a pool of our money managed by an insurance company. And so the more common the risk, the more common the need, the stronger and diverse the pool becomes. And so when they start taking adverse risk, when there's too much in a hurricane area versus a non-hurricane area, that's where the insurance companies start to have problems. So I need the states, if I'm Allstate, State Farm, Farmers, I can't just provide coverage in Florida and Texas, where all the hurricanes and tornadoes are. I need to be in Ohio. I need to be in Minnesota. I need to be in markets that don't have the same natural disaster exposure. And we're putting all that money together, and then we're managing it against losses. And all the insurance companies trying to do is make a spread. And if they can't make that 3, 5, 10% spread, they potentially go out of business, right? So they're not working on massive profits per se. It's a matter of, if we brought in 10 billion, did we pay out less than 10 billion? And then what did we get to keep? And then if the loss is 20 billion, well, now I'm short. How am I paying everybody? And that's where you see the rate increases. So when people say why Florida got so expensive, well, back-to-back years, this part of Florida, that part. It doesn't have to be the same town. It's still Florida. Florida's a massive state. So you got the East Coast, the West Coast, the North side, the South side, the Central side. Like, hurricane sweeps through, hits this part, that part, misses me. I feel okay, but now my rates are going up because Naples got hit. So I have to chip in. I have to pay more. And so the client's like, well, I didn't have any claims. I'm like, yeah, but you live in a hurricane state. So if the pot of money just got dissolved, do you want to be covered next year if the hurricane hits your house? Well, we need to replenish the pot. So regardless of what the insurance vehicle is, please just remember, it's all our money put together. Life insurance is all our money put together. And then, as we said, term versus permanent in our other episode, well, term's very rarely paid out. It's a big profit for the insurance companies. So they need those profits to offset some of the other risks that they take. And so that's why you see some companies stay in certain lines. Some of them have monoline. They only do one type of business. Others have a variety of lines. And so they could spread their risk around their different lines. So people say, well, why do I need an umbrella? Or why do they want a bundle? Well, why do you think the big push for bundling has been so strong on those TV ads? Because they don't want just the one risk. I'd rather give you a 10% discount, get your home, auto, and umbrella, and have 3 different lines, all of which have a different risk and a different profit ratio. And I'd rather give you a discount on the 3 than have you not have one of them or have it with somebody else in a competitor standpoint. Well, let us bundle it. And now we handle all of it. So now I've got $300 a month for your auto. I got $500 a month for your home. I got $100 a month for your umbrella. And it's calculated on their books differently. So their ratios are different, and it shores up their balance sheet so they're not illiquid. Again, people don't understand the dynamics of how these carriers, what their mandates are and what they need to do to stay in business. No different than a bank and having the right deposits in your FDIC insured bank accounts, right? Not to go down that tangent, but you saw banks default at the end of 2023. Like, how does that happen? Because their assets were mismarked. They invested in bonds that went against them. And so if you put in $1 and now it's worth 25 cents, well, how do you make up that 75 cents? You're suddenly illiquid. You're in receivership. You don't have enough to meet if every depositor wanted their money back, you have 25 cents on $1. You blew your dollar up. So that's not a good thing. So you don't want your insurance companies to have the same problem, no different than your banks. You need to have assets secured behind it. And so those are the things when you're looking at the credit worthiness of insurance companies is you're looking at their ratios, just like a bank. I digress. This public service announcement has been brought to you by Ask the Planman. All right. We're going to wrap it up there. Any other questions or points you had for today's episode?
No, I think this covered everything.
Oh, man. All right. So let's see if I could recap what we actually talked about today. So we were talking a little bit with Allie about your options should you have been denied or can't get the coverages that you may want, what you could be doing. Obviously, self-insuring, self-funding, looking at your budget, putting money aside as fast as possible to cover some of those gaps. Understand your benefits from the government. I guess the one piece we didn't talk about, Ali, is you could go get a job, not be self-employed, find a corporate job that offers benefits, and if they offer disability and life insurance up to certain amounts, those are guaranteed issue regardless of your individual employee's health. So that's a reason you would want to grow your business and hire staff where you could be eligible for a group plan for yourself. You're just a one-woman shop at the moment. Then you could aspire to get maybe 3 or 4 or 5 employees where we could then set up a group plan for you for your health insurance. And then you could provide disability and life insurance. And those are guaranteed issue in the corporate world. So I'm glad I remembered that point. That was a big talking point. I didn't have it in my notes. I forgot. So, that's something that a small business owner could grow into. Obviously, Allie's not looking to go back into corporate America. She'd like to be her own independent operator, right? And have her own business and be in her house on wheels. I guess that's something I learned new today.
Well,
so
we live in a normal house now.
Oh, it's a formal house now? All right. I just figured put it on the trailer and put it on the truck, and we're going to go to Albuquerque. Let's go.
No, that's in our backyard. We lived in it for 2 years. Now we're back in a normal house.
Gotcha. RVs became the big thing with COVID, right? Everybody kind of packed up and left and got an RV, and RV sales went through the roof, and people are living a nomadic life now, and good for them. So if you can do that, well, now we're back to how do you get the benefits that you need, right, to cover yourself for some of those situations. So you could go into the corporate world. A small business owner can get enough employees to start to qualify for those coverages. And again, drive home the point, those are guaranteed issue for the staff. You don't have to do underwriting. And again, the key is how many people. And just like your health insurance, if you have very unhealthy people, you'll have problems getting group coverages or offers that are affordable because they're looking at, you hire nothing but diabetic smoker cancer patients and they don't want your business. So, you have to give them some healthy people to go along with the unhealthy, but I digress. So anyway, self-insure, have a plan, put money aside. We talked about the structure of building your house on a strong foundation, starting at the bottom, working your way up. Your bottom is to have appropriate cash reserves, ideally 3, most likely 6 months of expenses put aside in the liquid vehicle, cash, short-term CDs, 1 to 3 months, something like that. You don't want to be buying a 5-year CD and then have to pay a penalty if you have to break it. But again, have some structure in that regard. Have your proper insurances in place. And then you work on the foundation level, you move up to the next level, from the base is your second floor would then be your investments, real estate, stocks, bonds, what have you. So you want to build your house properly and not have wobbly legs underneath you and not have proper coverage. But if you're denied coverage, then you need to take stronger action to self-insure, put money away, squeeze your budget as much as you can to put money in the bank to get to those 3, 6, 9, 12-month levels and then beyond. Because realistically, if you have a problem, it's not going to be for just 6 months. It could be much longer. If it's a permanent disability, well, then what are you going to do? So, folks, this has been another episode of Ask the Planman. My name is Bruce Weinstein. I hope you enjoyed today's episode. I hope you take corrective action. If you need some advice, always get it right. Come ask the Planman. Hit me up at 844-PLANMAN. Find us at planman.tv. Love to have you subscribe, share this episode, comment, let us know your thoughts, future episodes. Love to hear from you for ideas. Until next time, thanks for joining us. We'll see you.
When you need some advice, never sacrifice, always get it right. Ask the Planman. Finance, insurance, and more.